Hi, and welcome to the Market Alert for Tuesday, the 17th of May 2022. So the headlines from yesterday: the Fed is, work the rest out for yourself. They know it, we know it, they know we know it, and they intend to continue the charade anyway. Well, they've done that for the last 14 years, haven't they? So I wouldn't be at all surprised if they continue the lunacy that they've adopted since 2008. Blame the central bank, say the politicians. Well, I don't normally agree with any politician, but I have to say they're absolutely right on this occasion. Because the Bank of England is supposed to be independent. I very much doubt that anyway, but I do agree with them with regards to this. The politics of blame has profound consequences for the markets. It may do, but they're absolutely right on this occasion, and the International Mafia Fund and all the rest of them. So, yes, I do actually agree with that, which is a very rare occurrence, I can tell you. US gasoline prices hit new record high amid refinery bottleneck and tight supplies. This is in the US, but whatever happens in the US makes its way to the UK. The bottleneck is now to do with refining, and that's an interesting one. Must do a bit more research on that one, because as we're seeing here, oil prices surge past 113,000. Sorry, 113,000. Blimey, that'd be hyperinflation. $113 a barrel as Shanghai signals end of lockdown. Oil prices have topped $113 per barrel. An optimism that China's lockdowns are coming to an end and demand will not take a prolonged hit. And also, we are now being told, this again is US, but again, what happens in the US makes its way to the UK. There is a saying, when the US sneezes, the rest of the world catches a cold. We are now being told to expect food and diesel shortages for the foreseeable future. Eventually, we will see armed guards in supermarkets and food delivery trucks all over the nation. Maybe in America, I don't think that would happen here. Tend to be a bit more, well, hopefully a bit more civilized, but then cast your mind back to toilet roll fiasco of March 2020. Every man for himself, so who knows. But it'll be interesting as we head into the autumn, because that's when it's likely to come to fruition. But you can't say you haven't been warned. I've been talking about this for the last couple of years, and now we're actually seeing it come to fruition. And speaking of central bankers, Bailey was out yesterday. Cost of living, Bank of England governor warns of apocalyptic food prices due to war in Ukraine. This excuse all the time. Inflation was already at the levels that it's at now before Putin invaded in March, but of course they're using that as the excuse. So there's in an article there if you want to be depressed to read, when you know the central bankers now, they're just using it as the excuse because they have lost control. It's as simple as that. You know, they've prided themselves on having full control, inflation down at 2% or 1% for the US for years, and then all of a sudden, you know, COVID comes along, creates a supply issue, and then a demand issue with shortness of supply, and then the war as well, which is, like I say, disingenuous on the part of the central bankers, but they're using it. And of course, it is going to have an impact, but it's not already baked in like it was with the bulk of the inflation. I covered this a few weeks ago in the Market Alert when I showed you the graph. It was a tiny, tiny percentage at the top of the graph. But these people will use any excuse. But it's interesting to also see there's an element of truth that, something that we've been looking at in the Market Alert for a long time is actually coming to fruition, unfortunately. There's no pleasure in being right in any of the end game of any of this, I can assure you. It's going to be pretty miserable for all of us, but that is the truth. That is the reality. And news for today, Tuesday, we've got Bullard out. That'll be an interesting one. That can always spark some sort of reaction. And then we've got retail sales from the US. They're out. They're forecast to be sharply lower for the month-on-month retails, and then higher for the retail sales month-on-month. So the cores lower, the sales higher. I don't know why, but that's what they're doing there. And Powell is out tonight testifying at 7 p.m. as well, so the market will be waiting for that. I'm interested to see if he's going to blame the Ukraine and Russia war or adopt it as a policy to apportion blame elsewhere. And then finally, the gold-silver ratio has moved sharply lower. Let me just bring this into focus here. We got to 88. I was hoping we'd get to 100, but we haven't. We've come off that, bringing it down. But of course, the benchmark is in this area here of around 82. So it's got some way to go yet down to this level. Let's have a look at the Dow for yesterday. And you can see the market moving to the upside there, still struggling a bit, trading up towards 50% retracement from here back to here. Not quite making it. We've got to take out yesterday's high if we're going to move higher. There is some positive Ukrainian news overnight, which is giving the market a lift. That's why you're seeing it up at the moment. But it's still got to get through that 38% retracement there, then yesterday's high. And if we look at this in the 30-minute chart, there's your high for yesterday. We're above the DP on the overnight as well, despite a bit of a sell-off there at the end of yesterday's session. The market bouncing around 50%. I would say this move, let's just have a look. Yeah, just at 50% there. You can see that. Need to get through that. There'll be a bit of a struggle at 89 and then the high, but I would imagine that the market's going to use that news to continue to the upside. If not, watch the DP and also the 50 MA in the 30-minute chart. But yesterday afternoon session, again, you can see how the market is brought up beforehand in the futures market because they have sell orders they need to get rid of in the open, and that's why you've had an hour and a half or 2 hours of sideways move till the selling drops off. They manage to buy the market back and then bring it back to the upside. Oversold there on the downside and now making its way back to the upside. In the German DAX, we have a similar picture. A bit of bigger move though from the retracement from here back to here. We're at 78%. Market traded to the 50 yesterday. Warned about this. We have supply for the daily chart for yesterday. The market trading back to that 78%. Needs to take out the 50%. Then we've got the 89 that will also need to be removed. And then the recent high before we had the last sell-off. So we're getting the dead cat bounces here, as you can see. So now we're due for another one to the downside, as we saw in yesterday's headlines about enjoy the bear market rally, but don't stay there for too long. And in the 5-minute chart for yesterday, just a bit closer look. Oh, actually, did we look at the 30-minute? Yeah, we looked at... No, we haven't looked at the 30-minute, have we? We looked at the daily chart. 30-minute market sideways to lower in the initial kickoff. Let's just have a look at the futures. There you go. The futures, bit of a rally, then the market sold off, then it bounced, then it sold off, and eventually started to make its way up in the afternoon with the Dow there. But it wanted to go down yesterday, but just got held. And at the moment, you can see overnight also moving up with that bit of positive news that the mainstream are putting out at the moment. 20 bar, 50 bar down at the DP if there's any sort of selling there. And like the Dow, you'll find the high just above here for yesterday's trading session. Just move that across there and you will see it. So yeah, let's see what happens there. And then the 5-minute for yesterday, closer look inside. We're selling it in the futures market. We bounced in the cash and then we sold off down to the BRN there. Oversold with divergence. We got the volume there and we start switching to green parabolic, the momentum switches, and we eventually break through the DP. We have a bit of a pullback in the DP there with demand, and the market moves higher, and we see them absorbing the selling as the market moves up as well with the supply, and eventually become overbought with divergence, further divergence, crossover. We turn to red, we break the 200 and down we come, and then the market trades sideways until it waits for the US. We get a bit of a sell-off as the US, before the US opens. We get a very choppy session there with a huge volume as the market starts to change direction. You can see there we've got divergence with the oscillator starting to move to the upside, and then prices eventually moving back and following the Dow. Yesterday was a good trading day. There, the stats for yesterday. If you want to have a look at those, there was a gross profit of 316 for the day with a net of 303. And in the currencies, let's have a look at these. JPY daily, we're starting to see a bit of a bounce because the dollar's moved lower overnight, which we'll look at in just a moment, heading towards the 50% retracement. Let's just have a look, see. I say 50 bar moving average, not retracement. Retracement's in there now. We are at the 50 bar retracement, but that 50 MA ties in with the 62% retracement, the 20 bar tying in with the 20 bar moving average there. In the 30-minute chart for yesterday, overnight, we saw the market drop off sharply. We can see a double bottom test here. The momentum has already started to move back to the upside, up to the 200 MA where we become overbought. Supply 200 MA, market switches back to the DP where you'd expect to find some support. Market does a retracement. The momentum starts to shift. Parabolic turns green and we move back to the upside till we're overbought. And the market pulls back to the 20 bar moving average, oversold, crossover, parabolic changes, market moves to the upside. In the pound, a bit of a bounce going on here at the moment as well. It looks like we're about 89% retracement from here down to this low. We're at 78, so coming towards 89. This is going to be an interesting area as well. The dollar is moving lower, as I've mentioned, so let's see if this can hold. If it goes through here, then I will redraw the fibs from here and project up to this level here. 30-minute chart for yesterday, very similar to what you saw in the DAX. We had the sell-off overnight on the Monday night market sitting on the DP where you'd like to see the market hold with divergence, with some buying. Momentum is shifting to the upside. And we then break the 200. We become slightly overbought. Market trades sideways, and that's because of the 200 MA. Eventually, we break through, and then we continue until we're overbought. And finally, in the metals markets, let's start off with silver. They were allowed to move the price of silver up yesterday, which is a bit of a shocker. Today I expect it to reverse off this and move to the downside. I'm not changing my order from the $20. I'm sure that that's going to be tested at some point. So these are the downside targets that I've got. We didn't get the obligatory sell-off at 1 p.m. yesterday either, because the market did this first thing in the morning. This is at this red bar is at 9 a.m. The market had a spike down to the DP and then reversed. I was quite shocked to see this. I thought we were about to embark upon that $20 target, but they didn't. They brought the market back, and that's the way it stayed, even through the 1 p.m. fix, which is here. That's where the 1 p.m. fix is. So yeah, and here we've got 12:30 and 1 p.m. So we've got a couple of red bars there, but at the Friday high, and the market bought off that, and we actually saw an increase in volume as well as the market moved to the upside along with the momentum. But at the moment, the market holding at 21.50, which you can see there. If it breaks this, then we continue down to the DP, the 50 MA, the 200 MA, 21.04 in the S1, and then down to $20, and then below there we've got $21, then 20.83, and like I say, my order is still at $20, and I still think it's going lower. Gold up as well yesterday because the dollar was down, so let's have a look at the dollar. You can see not down markedly, but enough to actually bring the bullion markets up. And crude oil, of course, as we saw in the headlines, still trading in that sideways range. Needs to take out the 113 level, or 114 would be better. Let's just draw a couple of lines in, have a look and see what we've got here. So 113.77, we're just sort of sitting at that at the moment. So we've got through this area. We've also got a fib retracement from there to there. 78 needs to be taken out, which is 115, then 118. And the current high since the war is $138 a barrel. So we're still Got a few to go, another $20 to the upside, and we've also got this one here, $120. So if it's going to go up, $120 would be the first target. So there we go. That's it. Let's see what happens during today's session. Let's hope it's as good as yesterday. Nice moves yesterday to take advantage of. And let's see what happens at the end of the day with whatever Powell is going to say. I'm sure he'll be doing the same as Bailey, and that is going to be the blame game. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.